Live from the Business RadioX studios in Atlanta, it's time for the Exit Exchange, brought to you by XPX Atlanta, dedicated to changing the trajectory of exit planning services in the Southeast. Now, here's your host.
And hello again, everyone. This is John Ray with Business RadioX, and welcome to another edition of the Exit Exchange. I'm here alongside David Shavzin and Bob Tanksley. David, Bob, how are you today?
We're doing well. Thanks, John. Good to be back with you.
Yeah, great to be back for yet another edition, and we're on a roll. We've had some great guests, and we've got another one today. Harry Merker is with us, folks. He is managing director at Aon. Harry, welcome.
Thanks so much for having me today. Really appreciate you letting me come on your show.
Yeah, it's great to have you. Tell us a little bit about you and what you're up to at Aon. How are you serving folks out there?
As you all can imagine, it's been a bit of a challenge here in the pandemic without being able to get out there and see one another face to face. But we're doing okay. Currently, my role is serving as our East Region's middle market broking leader. And I know that's a bit of a mouthful, but what it is my team and I do is we are the face of our clients to the insurance marketplace, putting it simply.
Excellent. Well, welcome. Again, Harry, appreciate you being here. So let's get into it. Let's get to the heart of it for our business owner clients. What do you see owners doing wrong, missing, not understanding about their business insurance needs? And we only have 30 minutes for the show today.
Well, look, no. I'll tell you, I don't know that folks are necessarily doing things wrong. I just think that when it comes to specific approaches, it's good to be open about, what it is, open to listening about new products and essentially how to approach purchasing insurance. And what do I mean by that? Well, broadly speaking, everybody wants to focus on price, right? And price is definitely something that our insurance buyers everywhere want to be conscious of. But I think what's important is understanding how to be cognizant about not stepping over a dollar to pick up a penny, if that makes sense. I think when we're buying insurance and when we're protecting our business, it's important to have the broadest cover, again, at the lowest price, right? So part of what our job is to do is to help our clients and prospective clients think about ways to buy, right? It's some of our clients, when we initially get involved with them, may look to purchase insurance to comply with a loan, right? Which is great. But I think it's important to remember that those lenders who are lending money to business out there want to make sure that their money is protected and not necessarily protect the businesses, in their entirety that they may be lending to, right? So while your basic property insurance, general liability insurance, auto insurance, and even umbrella, right, to a specific limit that lender might set is appropriate. What we want to do is sort of go a little deeper into that, right? Some lenders may not be requiring cyber insurance. Is that something that, our buyers should be thinking about purchasing? Some lenders or some of the requirements may state that we'd look to purchase $5 million of excess liability insurance, but is that the appropriate amount of limit to buy, right? So I say that because, again, I think it's important to think in terms of how business owners, again, can protect themselves and insure or make a conscious decision not to insure or self-insure various exposures that they may come across day in and day out.
Hey, Harry, I've often heard there's 4 different ways to handle risk. There may be 5 or 6, I don't know. But can you go through those for our listening audience, which is primarily advisors to business owners, but we might even have some business owners here listening on the show as well.
Yep. So, look, broadly speaking, there are a number of ways to handle risk. The first one, would be to avoid it entirely. right? Risk practice, risk avoidance, which is let's do whatever we can to implement policies and procedures to make sure that, we don't really take on any individual risk as a business ourselves. I think that, while that's certainly an approach, I think that can be tough. So part of what we do is help business transfer risk onto insurance carriers, right? And that can come in a myriad of different ways, most of which are purchasing insurance policies, if that makes sense. So again, for a variety of different exposures, cyber, directors and officers, employment practices, straight general liability, workers' compensation, all of those things. These are lines of insurance that we would place on our client's behalf to transfer in the individual risk of a business onto an insurance program. And thereafter, there are ways of managing that risk, right? Making sure that there are appropriate loss control procedures in place to avoid, to mitigate losses from happening before they start, or to make sure that there are appropriate post-loss procedures in place in the form of claims procedures and what happens in the event of a loss and how quickly can we, sort of tackle the event or the occurrence that's happened to make sure that it doesn't balloon into something larger. I'm not sure if that fully answered your question, but broadly speaking, those are the conversations that we're having with clients and prospective clients alike, again, to make sure that their business is appropriately protected.
Yeah, and you just mentioned cyber. You don't have to be a super large company to have a hacking incident from some group overseas, or take Colonial Pipeline most recently in the news. You can be a small business, like a lot of our listeners and advisors to business owners might have as clients. Cyber, COVID, what are some hot button policies that should be considered now?
Well, I mean, certainly cyber insurance is absolutely one of those, right? It's this, cyber insurance. And again, I won't pretend to be an expert on cyber insurance because we actually have another group within Aon that places that. But we speak to clients a lot about that. And broadly speaking, it's, if you're a business that takes in any sort of personal information, and when I say personal information, it could be in the form of accepting credit cards for payment, right? For what it is you're doing. You're housing specific information for the clients that you serve, which means they are effectively at risk. And what I'd say is that cyber insurance, much like cyber attacks, is an ever evolving exposure, right? With every, with every attack, we seem to learn something new, or the industry seems to learn something new about how these attacks are being made and what's happening, right? And more importantly, what's happening after a loss. So one of the interesting things about the Colonial Pipeline is that they settled. And what I mean by they settled is they paid the ransom, right, in order to get past it. I think that is a specific phenomenon that you could see happening more and more. And what that means is needing to ensure that the proper insurance coverage is placed so that the individual business isn't paying those, that ransom out of their bottom line, right? So it's I say that because, again, there are a number of different mechanisms within cyber insurance and a number of different coverages. And again, I won't pretend, that I know all of them, but I'm happy to put folks in touch with folks, in our organization that do. But, what I'd say is that it's an ever evolving exposure. And what's happening is in traditional lines of insurance, general liability, for instance, there are movements to exclude that within your standard general liability placement because, much like pollution liability, let's say, those coverages are better insured and more broadly insured within their own standalone policy, right? So going back to the initial question that you asked me, what are folks sort of thinking about? Again, if we go back to that example where some clients are purchasing to what a lender is requiring, lender may not require you to buy cyber insurance, but is it a good idea? Probably worth certainly evaluating the cost benefit of purchasing it, right? Because again, I think it's important that we understand that potentially paying $50,000, and I'll just picking a number out of thin air, potentially paying $50,000 for cyber liability insurance to avoid paying a $5 million ransom down the line to protect your client's personal information might be a good idea, right? And sadly, sometimes it takes a loss to occur, and it takes sort of having that pain to realize, you know what, I should have done that. I absolutely should have done that. So again, if you talk about, what it is our role is as property, as advisors, as risk advisors to clients, it's weighing the cost benefit to clients and helping them sort of navigate their way through what should I purchase? How should I purchase it? And how much of it should I purchase, if that makes sense?
Folks, we're chatting with Harry Merker, and Harry is a managing director of Aon. Harry, one of the things I think would happen along the way as folks go down that trail looking at cyber insurance is they might get a look into some of their practices, because the insurance company is going to be asking questions about some of their best practices in terms of data protection, cyber protection that they have in place, right? So it's a really good way to get a report card on where you stand as a business.
Absolutely. And I'll tell you, candidly, the application for cyber insurance is some of our clients' worst nightmares. And what do I mean by that? Well, it is the longest application. I think it's over 20 pages at this point, that can only be filled out by somebody who has intimate knowledge of a network. And the most amazing thing is, and again, we're not, I would never tell somebody that they're doing something wrong or what they have is bad, right? But what we find is that some of our clients who are filling this out can think, well, I've got the most sophisticated system in the world. I mean, look at the Colonial Pipeline, right? We've got the most sophisticated system in the world. And what's interesting about that, and I'm gonna pilfer something that I heard somebody say on a call a couple days ago, which was, you could have the most sophisticated system in the world, but many of these cyber attacks are human error, right? These are phishing emails that are sent to employees, that look legitimate, and click on a link, and all of a sudden you click on that link and boom, right? They're in and we're in trouble, right? So I say that because it is voluminous. There is a lot of things, that you need to know about the network that you have. And again, I'm going to apologize to my colleagues in the cyber world within Aon, because again, I'm not, a cyber guy. I know enough to be dangerous, which at times can be dangerous. But, what I'd say is, it's absolutely worth having a risk evaluation to determine the level of cyber insurance that's needed, to determine what potential improvements could be made to IT infrastructure to avoid these things happening moving forward. And the best part about it is, again, I'll do a shameless plug for Aon, is we literally have folks, within our world and within the Aon, stratosphere, where all they do is do this. And it's, as you talk about, taking it back to the more macro level and how we can be of benefit to our clients, it's helping them with the problems that they have, but it's also helping them understand the problems that they may not know exist, right? And how to address those particular issues, sort of bringing them to the forefront, addressing those particular issues, again, via risk transfer or internal policy tweaks, to make sure that nothing bad happens, right? I mean, our job is to make sure that our clients and their executive boards can sleep at night. So we wanted to find out what keeps them up.
So Harry, two things really kind of harkens back to Bob's question earlier on, and talking about avoiding. You really need both, right? What you're saying is you need to have the right coverage, but you also need to be vigilant internal within the company, right, to avoid these things, whether it's employees opening emails to safety issues on a warehouse floor or something like that. But swinging back to the different coverages, you mentioned that may be in some cases more prudent to have a standalone policy. But if you look at the wide range of potential coverages, how much of those typically are and can be economically packaged up into a policy versus having multiple policies in different areas, and then I say reasonably priced, whatever that means.
Well, here's what I'll tell you. It's broadly speaking, when we look to roll out a comprehensive insurance program for any of our clients, we're going to try to make sure that all of those are effective on the same date so it can be treated as a package, right? Taking it a step further, one of the other things that we look to do from a strategy perspective is consolidate as many lines of insurance with one insurance carrier as possible, right? The reason we want to do that is not only to take advantage of potential discounts and what I refer to as bottom line underwriting, sort of underwriting to the bottom line and not the individual line, right? But because that can be more economical. And to our clients, they're looking at one line item for insurance. Yes, there may be workers' compensation, general liability, property within that. But for us, for them, it really is one entire insurance solution, and that can come from multiple different lines. And candidly, as long as we can do what we are able to make sure that all of those lines of insurance renew on the same date, so that our controller, who also might have their toe in HR, who might have their toe in a number of other things, doesn't have to spend all their time in the world on insurance, right? It's all of it can sort of be treated as a package, right? And it's again, in policy discounts, right, as we talk about underwriting to the bottom line, could be available and should be available, right? So part of what's included in that package, right, your standalone coverages such as D&O, as cyber, as pollution, EPLI, any number of other lines of insurance that might be appropriate for a specific business. Again, our job is to generate those terms, create competition in the marketplace, bring those quotes to our business owners, and weigh the cost benefit of purchasing, right? And even thereafter, weigh the cost benefit of not only purchasing specific limit on top, but also weigh the cost benefit of what we're buying on the bottom in the form of deductibles, right? Not everything has to be a first dollar insurance program, if that makes sense.
Yeah, no, it does. So for the question, without, obviously not disparaging, Aon and the organization, but out there, you've been in it for a long time. But among companies, do you find that what you described there, right, is pulling it all together, discounts, working all that? Are different companies better at different categories? In other words, even though it may make sense to co-terminate.
No question.
Okay.
No question. And again, there will be, and my market partners out there will string me up on my toes, but by broadly, making a broad generalization. But what I would probably say is 60% of the businesses out there, you talk about manufacturing, wholesale distribution, maybe some real estate, major sort of categories of industry out there will likely be written in one way, shape, or form by, we'll call it 7 to 10 insurance carriers, right? Now, within that, each of them has a different approach to risk. And what I mean by that is, again, their models are shaped over time based on losses. And stop me if I get too granular. I think if we were in a room, somebody be able to kick me under the table and say, Harry, we're losing you here. But it's, they underwrite them in different ways. And what I mean by that is, carrier A may have an adverse loss experience to workers' compensation in the manufacturing industry, but carrier B may not. So carrier A may be a little bit more conservative in their underwriting approach to that line of insurance, where carrier B may be more aggressive, right? And it's incumbent upon us as brokers, right, to create that, to not only know what each carrier is strong at and, and how they're strong, but also to create competition amongst those carriers so that coverage can be as broad as possible and price can be depressed as much as possible, if that makes sense.
Yeah, definitely. And one more, because I'm really curious, and I'll let Bob jump in after. But back to we mentioned it, but COVID. What are you seeing these days specifically with COVID? It's been a year and a half. I just got something to sign for just in our neighborhood, for the common areas and all that. Like it was 2 pages of signing your life away. What are you starting to see with COVID from a business standpoint?
Well, what's interesting is there was a question, there's a question as to whether or not COVID, or even a broader, to put it more broadly, communicable disease was a covered cause of loss, right? Reason being is let's take property insurance, for example, right? Where many folks, were unfortunately had to shutter their businesses, restaurants, right? Had to shutter their business because it was simply unsafe for them to serve clients. Well, unfortunately, the mechanism within a property insurance policy, business interruption, which allows you, to claim a loss of income, must be triggered by direct physical loss, a fire, a flood, a hurricane, something like that. Sadly, that didn't happen here. So while there was a serious loss of income to many businesses, which is extremely unfortunate, the business interruption trigger in the policy, which is direct physical loss, didn't happen. So what you see right now is a whole bunch of litigation, right, for many business owners, who are upset because they bought insurance. They can't make claims. I completely empathize with that. But sadly, insurance contracts are written to be very specific as it relates to that, right? So there is a bunch of litigation, which, if overturned, could see a flood of compensable claims coming through the market. We're just not there yet. One of the things that's been being, that is being kicked around, I'd have to do a little research on where that is. But much like the government response to 9/11, which was the Terrorism Risk Insurance Act, which was a government backstop for certified terrorist events here in the United States of about $100 million, somewhere caught up in either the House or Senate is the Pandemic Response Insurance Act, and the government is now talking about, or had been talking previously about, creating a similar backstop similar to terrorism, right? So sadly, the insurance industry, remember I said earlier that many models are sort of influenced by prior claims. The response of the insurance industry from a property and general liability perspective is an outright communicable disease exclusion on policies because of the question of, in the event this happens again, you still have to trigger direct physical loss. So I say that because I don't know that the insurance industry yet, sadly, we are a reactive industry more than we are proactive, right? I don't know that we're there yet from an insurance product or an insurability perspective of coronavirus per se, but mark my words, it's coming. And, sadly, when it comes, I cannot imagine it will be affordable at all because of the amount of losses and because of what we've seen, the unprecedented, economic losses that we've seen thus far. But again, I think that will be another arrow in the quiver of insurance professionals to talk about, products to talk about their, to their clients with, about whether or not it makes sense to insure for something like this. Mm-hmm. So I'm not sure if that, that may have been a very long-winded way of answering your question, but I hope I touched on, some meaningful responses to that.
Yeah, just like 9/11, COVID came out of nowhere, and the country and business owners, government leaders and whatnot, everyone had to adapt to it literally day by day, which brings up the point that owners, I don't think, are going to stop facing challenges going forward. And our XPX Atlanta members, which include accountants, attorneys, wealth advisors, consultants, bankers, M&A people, valuation folks, broad spectrum, are working with owners in their capacities on a regular basis. What message would you have for them to encourage their business owner clients to now start considering, hey, there are some major risks out there. Are you properly covered? Are you dialed in? Because whether it's a transaction and not a transition, as we technically define those here in the chapter, the owner is going to be leaving their business at some point to someone. And why not in the best shape possible with the most risk mitigated possible?
Absolutely. Well, I mean, look, what I'd say is be as inquisitive as possible and don't be afraid to ask questions, right? I think when it comes to insurance, it can be considered relatively arbitrary. What I mean by that is, well, what do we sell? We're selling a piece of paper and a promise to pay, right? So I say that because you would be absolutely surprised at what you actually can insure. So when I say be inquisitive and be curious and ask questions, I find that some clients or some prospective clients may have a bit of reticence to actually ask questions, right? Because it may expose the fact that they may not know a lot about insurance, and that's okay, right? That's why you hire an insurance professional in the same way you hire a lawyer and in the same way you hire an accountant, right? We may not have to go to school as long as those lawyers, right? But we are a professional service, and there is a lot to learn, and there are subject matter experts in literally everything, right? And I say that because insurance, yes, while it is reactive, by nature as an industry, there's some products out there, that would absolutely blow your mind. You can insure intellectual property now, which is extraordinary. Tax liability, which is extraordinary. Reps and warranties, right? In the event of a sale of a business from one to another. I mean, these are cutting edge insurance products, that are relatively new, right? So I say that because, again, it's, as you talk about, particularly as you talk about handing down a business and wanting to make sure it's in the right condition, or even selling a business, right? Insurance is an asset on the balance sheet, right? Whether it's a stock purchase or an asset deal, in any given deal, you're picking up liabilities of the past owner. Depending on the insurance program, these can all be, tied back or transferred onto an insurance policy, again, which makes insurance an asset. Right. So I'd say be as inquisitive as possible. Make sure the folks that you're working with have the knowledge. And if they don't, make sure they're at a firm that has the resources to have those knowledges, because, that knowledge, because again, what we do, and part of what we do in the most basic form, is helping the executive board, the executives and the boards of the clients that we service sleep at night, right? We want to know what keeps them up at night. We want to know how they can address that, either through transferring risk or, creating new policies and procedures to make sure that they get that sleep and they don't have to worry about it. Does that make sense?
Yeah, it does. Yeah, thanks, Harry. Good points. I think another point could be made here as well that we made in the last show last month when we had a tax advisor on, and that is, business owners, if you're listening, stay close to your advisors. Advisors, if you're listening, stay close to your business owners.
Yeah.
Awesome.
Lean on them as much as possible. That's what they're there for, and that's what you're paying them for.
Yeah.
Great words from Harry. Harry, this has been terrific. Folks, Harry Merker from Aon, he's managing director at Aon. This has been terrific, and I can't imagine there aren't some folks out there that have heard what you've had to say and want to get in touch. So now let's get to that important question. What are your coordinates where they can connect with you?
Sure. So, I'm definitely online at LinkedIn. I don't think there are a lot of Harry Merkers out there that work for Aon. That's Merker. Feel free to email at Harry, HARRY .Merker, MERKER @AON.com. And happy to drop my phone number as well, area code 954-608-2064. Till we're in the office, mobile phone is the best way to get a hold of all of us. So, like I said, be as liberal with my contact information as you'd like. If I can't answer your question, I'll make sure to get you to an expert within our firm who can.
That's great. Harry Merker with Aon. Harry, thanks so much for coming on the show.
Thank you for having me. I really appreciate it.
Absolutely. Folks, just a quick reminder that XPX Atlanta is a high-quality network of advisors and service providers that are focused on collaboration, and they place the client's interest at the center of everything that they do. This group represents a broad representation of exit planning competencies in value building, value transfer, and life legacy for business owners. For more information on XPX Atlanta and all the great resources that it offers, go to xpxatlanta.org. And if you want to see an archive of all our shows, you can go to xpxatlantaradio.com. David, Bob, another great one.
Absolutely,
Yep.
John. Thanks much.
Yeah.
Thanks, John.
Terrific.
Fifth episode. Appreciate it.
Yeah, it's been a good series so far, and we got more coming next month, folks. So we look forward to having you join us again on the Exit Exchange.